Whole life, premium finance, does it work? When does it work? How does it work?
The education gap within this is very, very massive. People don't understand what they're getting into, and so they don't understand what the risks are. And well, if you understand risks and you manage and mitigate those, that's just not going to fail.
What's that conversation like when you're sitting down with people? Because I'm sure all the wealthy families that are talking to you are seeing all kinds of options.
I take an entirely different approach than most people. I think your family wants to figure out how to sell your business for pennies on the dollar or your real estate to pay for taxes. And see, people that care about their families don't want them to have to deal with that. There are times a bank is better at it than you will be. There are times you don't want to be your own bank, and it's helpful to use somebody else's money.
I'm going to ask you the IUL versus whole life question. There's a lot of people doing premium finance with IUL.
Why does it seem to go belly up so much more often inside of indexed universal life?
You're probably seeing a lot more of that.
I love seeing it. I like watching Pac Life squirm right now just because the product's so complicated, people don't understand it.
One of the bigger pushbacks to life insurance is you should have enough money where you don't need insurance. And the funny thing is, not only are ultra wealthy families working with you, but you're financing that in some cases.
Just think about who it is that would say something like that, right? It's people that are not ultra wealthy.
Kuldeep, welcome back to the BetterWealth Show. We're at Tom Wall's event. You spoke yesterday. You spoke today. You were like known for being like the guy when it comes to whole life, premium finance, high net worth cases. A lot of things that we can do, but this is gonna be like a fire round. Would love to hear whole life, premium finance. Does it work? When does it work? How does it work?
Okay, well, it's not a loaded question at all. So you want me to start with tax and legal advice here? So I'm not going to give any of that. This seems easy.
Send me all the legal letters. If something he says ticks you off, just send it to me.
Whole life with premium financing always works when done correctly. It always works, right? And that's an absolute promise if you do it the right way. There's going to be considerations of the right client profile, right? Who are the right people that should be doing it? People that are rich enough that can afford it. And when I say afford it, they should be able to afford the premium outright with or without a bank. If you can't write the check, don't do the thing.
Yeah.
Number two that comes to mind is you should understand what you're doing, right? Why do people take out mortgages and not somehow completely upside down in every single scenario? There's a right and wrong person for a mortgage. They understand what a mortgage is. This is not much more complicated, but the education gap within this is very, very massive. Like people don't understand what they're getting into, and so they don't understand what the risks are. And well, if you understand risks and you manage and mitigate those, this is not going to fail. Well, it should not fail. Number three, product choice. Well, why does it seem to go belly up so much more often inside of indexed universal life product?
You're probably seeing a lot more of that.
I love seeing it. I like watching Pac Life squirm right now, even though it's not a finance case, just because the product's so complicated, people don't understand it. So if I take a really complicated product that me as an advisor, and I'm pretty good at what I do, and I don't fully get it. I went out and I sold my first 2 IULs. Fun story. One's on my mom, one's on a guy on my team who does all of our cases on, because I'm like, if we can't figure it out, how on earth are we going to tell a client to do it? And we get into large retention cases too, where people need $200, $300, $400 million of coverage, and we might have to do some of that. But the product's so complicated. I know the client doesn't get it because I barely get it. And I get it. I understand it.
You're a smart cookie. Yeah.
They're hard, man.
Yeah.
They require a lot more time and energy. And the end outcome of having done that perfectly is like marginally better than just doing it with whole life, which we know the product works.
Yes.
And then so if I just have to unpack whole life on its own, right? Like we're at a whole life conference. I'm a big believer. We heard Bobby Samuelson talk about it yesterday. We've had a lot of wisdom out of Tom Wall, Wade Fowle, guys with PhDs in this thing. The thing always works. Where does it go wrong inside of whole life? Well, people use the wrong products. There's types of products built for this. There's types of products that it's a little bit harder to do. And yes, you can still make it work within those longer pay versus a shorter pay, contained, constrained. We know where pitfalls of a product might be. We know where it's going to excel. We know what IRRs are likely to be. We don't know what dividends are. They're not guaranteed, but you kind of know how the product's going to work because it's always worked in that way and it doesn't really...
And just because the dividend might be slow or smaller, it's not going to blow up the policy.
It still always works.
Right.
Most of whole life is based on the promise of a guaranteed component, and that guarantee doesn't go away. It's always going to be there.
So when wealthy people come to you, because you work with very wealthy families, family offices, some top advisors will bring people to you and work with you when it comes to this expertise. What problem are they solving? Because one of the bigger pushbacks to life insurance is you should have enough money where you don't need insurance. And the funny thing is, not only are ultra wealthy families working with you, but you're financing that in some cases.
Just think about who it is that would say something like that, right? It's people that are not ultra wealthy, think they don't need it. Like at the lower tier of wealth, you're in trying to make your first $1 million of net worth, 5, 10. what do you need insurance for? What problem are we solving? It's to protect widows and orphans, right? Like that is the ultimate. And that is a big, important thing. It can be solved with term, right? It's probably most effective with term. And it gets into this whole conversation of buy term, invest the difference. The problem is people just don't invest the difference. If you did the thing, of course, I'm okay with it. Nobody does. At the upper tier, it's, well, I'm going to pay estate taxes. My family's going to lose 20, 30, 40, 50% of my wealth. I don't want them to lose that. I'd rather have an insurance company, and I'd rather use OPM, right? Other people's money, and that's the insurance company's money. So in my world, it's okay. I'd rather use somebody else's money to pay for my estate tax, or to help figure out how we're going to take my, capital gains inside of my trust and make that go away. I don't want to have my family deal with any of that. Okay, well, in my world, if you're just extrapolating, I'm using other people's money to pay for a tax bill, and I'm using other people's money to pay for the premium for that tax bill. It's really cyclical. And where does all of this going to blow up? Well, you still got to pay the bank off.
Right.
And that's where all of it fails. So they're solving a problem of, I have a liquidity crunch right now. I don't want to use my capital, right? I don't want to use my cash flow and divert it from something that is growing at 8, 10, 12, 15, 20% right now, growing inside of my business, hedge fund, real estate. I don't care, whatever it is that you're using to create wealth. I don't want to use that capital and take it away from something that's going to be earning high to pay for the insurance right now. So I'm solving that with the financing, and the insurance is solving that future liquidity problem that's going to be insurmountable and require them to sell off a business. Do you think your family wants to figure out how to sell your business for pennies on the dollar, or your real estate to pay for taxes? And see, people that care about their families don't want them to have to deal with that.
It's a first world problem, but you could get a wealthy family in a tough situation, especially if they have to sell assets or business or real estate when the market might not be in a good place. So I'm going to break down in my own language and you correct me. So wealthy families have a problem. It's called estate taxes, which means if and when they die, they might have to pay up to
50%, let's call it.
50% of their assets if they don't do proper planning. Life insurance is a very common vehicle that they can use when it comes to that. The problem is it's opportunity cost. They have the money, but it's in this investment, it's in this business, it's in this home. And so just like you might have the money to buy a $10 million home, a 30-year mortgage doesn't mean you're broke. It just means that you have now options. You could pay off the home if you wanted, but now you have extra liquidity and options. So life insurance is the product, and they could write the check, but they're like, hey, my opportunity cost is way greater than what this bank will give me.
That's it.
And so why wouldn't I take the bank's loan, lock up life insurance? Oh, by the way, I'm not going to take on extra risk, or I'm not going to roll the dice and to see if this thing is going to blow up or not. I'm set over here, leaving my money, doing my thing. It's almost, and maybe you can or cannot say this, the people that like infinite banking, it's infinite banking squared. And you're not necessarily using the policy, but your money's over here, and you're essentially using leverage, getting the benefits of life insurance and the benefits of your money being more productive. If you're a high-earning professional, entrepreneur, or someone who wants more control of your money, we offer something called a Clarity Call. It's a one-on-one conversation where we learn more about your situation and walk you through how integrating whole life insurance could help better your financial situation. It's no pressure or fluff, just real clarity on whether this strategy is right for you. Click the link in the description or tag comment below, and we'll walk you through exactly how we can help you.
It is synonymous. There are a lot of the same use cases. It's just using external leverage instead of internal leverage. There are times a bank is better at it than you will be.
Yes.
Right? There are times you don't want to be your own bank, and it's helpful to use somebody else's money. This is that.
Yes.
Right? When you're creating your wealth and you want to save more in your pocket, it's a wonderful strategy. I understand the mechanism. But if you are doing that wealth creation inside of your business, where do you want all of your money to go? You want it to go back into your business, because one day you want to sell this thing. You want to pass it on.
Yes.
This is the right time to go out and get leverage.
Your average client, what type of net worth and problems do they get? You're
the average client of we had last year was about $86 million of net worth.
Okay.
Now I have clients that are worth $10 million. They've got a business. It's worth a couple million. They're still growing it. They're getting it to that scaling point of their life. I also have clients worth $7 billion. So we've got a spectrum here.
Yeah.
The beauty of it is I get to take the ideas from the sevens and the 2 billion and the $500 million, and I get to bring those to everybody.
Yeah.
So it's not like we're just doing the insurance planning, right? Insurance is a component of a great financial plan, of a great estate plan. But there are other things that must happen, because if we don't do those other things, you're going to have to buy I don't know, what's half of $7 billion? We can't buy you $3.5 billion of insurance. But if we get on this journey today and you're worth $100 million, we do the estate planning and freeze and squeeze your estate so we don't have to go out and buy $100 million, $200 million of insurance in the future. We can solve this problem for $30 or $40 million. So our world is actually helping them understand what that problem is. And it's not just the estate tax. There are other taxes they're going to have, but their ultimate problem is they want to have the most options and flexibility within themselves, their lives, and at their passing for their family to retain and really enjoy that wealth and to be good, productive members of society for a very, very long time to come.
When you're working with family offices, they have whole due diligence teams and all. What are the reasons they like insurance? And then also give me, what are the questions or pushbacks they have when they're vetting you versus other people when it comes to insurance?
Yeah, I don't get a lot of pushback. I think the thing that we have mastered is trying to make sure people are educated. I take an entirely different approach to most people, right? I come out the gate, I tell clients all my compliance crap, all the stuff they need to know, they want to know, that they haven't yet asked, that they probably should have asked. And I tell them, here's the stuff you should have asked me already. You haven't, you didn't look this up, you should look this up. And then I help them understand that no matter what I go through, if you don't understand it, we're not going to do it. And the only way I know that you understand it is you can explain it back. You've got 12 other people on your team. I'm going to make sure they're educated and they know how to execute. There's not a lot of people doing what we do, right? There's not a lot of competition. Now, where's the pushback supposed to come? Product choice doesn't really happen because I'm pretty upfront about I'm using the product that pays me the least, and that's how I know it works the best for you.
Yeah.
So I'm like, I kind of wish there was more of it. Now, 3 or 4 years ago, man, I was still getting a lot of pushback. 7 or 10 years ago, oh my God, it was difficult. And mind you, if you think about my business 6 years ago, 5 years ago, interest rates were a lot lower. It was a lot easier.
Yeah.
It's actually a lot easier now because I've evolved and I've gotten better. So from the respect of with respect to family offices and ultra wealthy people, the pushback is not, it doesn't exist, I would say. I think their considerations are different. And because we are so planning heavy, we're not product heavy. This is a solution to a problem, but if we don't try to do all of the appropriate solutions in planning, this is not going to work. I think I end up bullying their team into learning.
Yes.
And they respect it.
Yes, you're very direct. We have a few more minutes. With that, I'm going to ask you the IUL versus whole life question. There's a lot of people doing premium finance with IUL. There can be some benefits with IUL with flexibility, death benefit and all, but it's like canary in the coal mine concept. And I mean, Kyle Busch is like an extreme example of, he did not even have a finance policy and it was a freaking disaster. Now there's a lot of bad, I don't want to give IUL all that bad rap, but that's just an example. Imagine if that was finance on top of that. Talk to me about whole life versus IUL, and when, what's that conversation like when you're sitting down with people? Because I'm sure all the wealthy families that are talking to you are seeing all kinds of options.
So our product competition at this point is not IUL. It's like the guaranteed, secondary guarantee products.
GULs kind of deal.
GULs, GVULs. I think that is a very good product set. I don't have any issue with it. But why do clients end up not doing that and prefer to do whole life and finance it occasionally? Not all of our clients are financing the premium. Sometimes I just write the damn check, and that's okay too. So let's go unpack, right? IUL is not an inherently bad product. It's just a very complicated product. And if it worked perfectly, you'd end up at roughly the same result as whole life. So why would you want to take on the risk and the headache and the management and the dealing with the extra problems for roughly the same result? So people tend to just gravitate towards simpler. If you break down what the end goal of estate planning is, it's control of your money and giving it to the right people when you want, in the conditions you want, and still maintaining access to the wealth and income and control. This is too complicated. I can't control the damn thing. I can't control whole life either, but at least I know it works. And when you have a successful estate plan executed, well, do you want to add more risk to that, or do you want to have more simplicity? And people don't want the risk. They want that more simple. And I know whole life is complicated. It's a black box of complications, but you know what? I got Tom Wall to help unpack all of that, so I'm okay. I think we're the GVUL type.
And a guaranteed universal life, just for those of you listening or watching, you don't get any cash value, but if set up properly, it will have a death benefit that will pay upon your death or your spouse's death, depending on how it's designed. So a lot of times from estate planning, it is cheaper than whole life, but you don't get any cash value tied to it.
And thank you. That is probably one of the better explanations, and that's probably better than how I would have explained it. People don't realize that they would like that cash value until it's a lot later. So Do you know for sure what you're going to want when you're 70? No, but what does everybody always want in life? Options and flexibility.
Yes.
This is going to be more static. You will not be able to adjust it. It is beautiful in the fact that it does work. But would you prefer a lot more options and flexibility, being able to use your capital? If we design the trust properly, you have access. That cash value could be very tremendous. If we ended up financing it, because we can't finance the GVUL, right? It's not a product for this. It is the cheapest possible option for repairing this problem. It does not grow with your inflation
Can't
issue.
finance it, guaranteed
Can't
universal
finance
life.
it. Yeah, anything with a V in it, the variables, you can't finance.
Okay.
You get into complications. We're not even going to open that can of worms.
Okay.
But on the whole life side, if you did finance that product, and let's say you owe the bank $10 million, you sell your business for 20, you can just take 10 of it, pay the bank off, and you recovered a lot of cash value that you have access to, right? Assuming we structured it correctly with the right trust. Pretty good at that because we bring in the best attorneys to do that. So you could have that same thing occur inside of an IUL. You could also have a high probability it doesn't occur.
Right.
If somebody screws up along the way. Kyle Busch is a pretty good example, right? The product's not inherently bad. The carrier's not inherently bad. I think they're fine. They're all fine. But something went very, very drastically wrong. And if you unpack and read the lawsuit, and I've read a lot of things went wrong continually and again, and somebody had to figure out how to fix it, and nobody did.
So can you finance a guaranteed universal life policy?
Guaranteed universal life, yes.
Okay.
But there would never be cash value in it, so how would you pay the bank off? And if your only strategy is death,
you're going to have to increase collateral every single year, and that could be inherently bad. Thank you for coming on. You're doing a lot of content. We'll include your channel, your content down below. You're watching this, and you want to work with one of the best. We'll have a link to you and your team and your firm down below. And this hopefully will not be the last time. You got to speak at my event. Hoping to do more with you in 2026 and beyond.
Appreciate you.
And so thank you for showing up and dropping some dimes. If you're an advisor, life insurance agent, or someone who just loves the life insurance space, we have a must-attend event for you. It's our 5th annual Life Insurance Summit, June 15th through the 17th, right here in Nashville, Tennessee. Not only are we going to have the biggest names in the life insurance space, but this is also an incredible opportunity for you to meet and connect with like-minded individuals and be a part of our ever-growing community. Learn more and get your tickets before they sell out in the link in the description or pinned comment. Can't wait to see you there.